Good evening. Let's get straight to the point. For years, we've talked about the Goods and Services Tax (GST). It was introduced in 2017 as One Nation, One Tax to simplify India's complex tax system. GST is an indirect tax you and I pay on almost everything: a bar of soap, a new car. It replaced a confusing web of taxes: VAT, service tax, excise duty. The idea: make business easier and the tax system transparent. Many have felt the pinch of high tax rates and called for simplification. Now the government is rolling out the next generation GST reforms. Timing is deliberate. It's September 2025. The air is thick with festive anticipation. Navratri, Dussehra, Diwali. Families open wallets to shop, celebrate, make big purchases. Government hopes reforms boost festive spending and deliver real savings. Centerpiece: a massive campaign. GST Bachat Utsav, Festival of Savings. Message: your money should go further thanks to tax changes that affect daily life. Why now, 8 years later? Government: economy stabilized and GST matured for overhaul. So, what are these big changes we're hearing about? Let's break down the new structure. The most significant reform is the simplification of the GST tax slabs. The old 5-slab system, 0%, 5%, 12%, 18%, 28%, often caused confusion and classification disputes. The next-gen reforms have streamlined this into a 3-slab structure. A 0% or exempt slab, a standard rate of 10% for most goods and services, a higher rate of 25% for luxury items and sin goods. This simplification is a major step. The government's aim is to make the tax system less complicated for both consumers and businesses, reducing paperwork and the potential for errors in filing returns. The most welcome news for every household is the expansion of the 0% tax slab. Many daily essentials have now become completely tax-free. Rice, wheat flour, pulses, milk, fresh vegetables. Previously, some of these items attracted a 5% GST if they were branded or pre-packaged, a point of much public debate. Now that distinction has been largely removed for basic necessities. This means the price you pay for your daily groceries should see a direct reduction. This change is aimed squarely at easing the financial pressure on lower and middle-income families, making sure that basic nutrition is not burdened by taxes. The benefits extend beyond the kitchen. The reforms have brought significant relief for students and parents. The government's messaging around these next-gen GST reforms is loud and clear, and it revolves around a single, powerful promise: more savings for you. Officials claim that a typical family of 4 could save anywhere from Rs1 500 to Rs2 500 every month on their household expenses. Elimination of GST on essential food items, school supplies, medicines, and reduction of the standard tax rate on many other goods. This isn't a theoretical benefit. It's tangible money that will remain in your bank account. You can choose to save it or spend it elsewhere, boosting other sectors. Beyond individual savings, the government says these reforms will boost ease of doing business. Simplified 3-slab structure reduces compliance costs and legal complexities for millions of SMEs. Fewer tax rates = less paperwork, more time for innovation, production expansion. Creates a business-friendly environment, encourages entrepreneurship, makes Indian businesses more competitive globally. Goal: remove friction that has slowed commercial activity. Boost to Make in India initiative. Lowering taxes on consumer durables to 10% aims to stimulate demand. The economic engine runs faster. A virtuous cycle of growth and prosperity. Move toward a more formal, transparent economy. Economists are busy crunching the numbers, and the initial estimates of the economic impact are overwhelmingly positive. Projections from the Ministry of Finance suggest these GST reforms could inject over 1 lakh crore rupees of purchasing power back into the hands of consumers annually. This isn't just loose change, it's a significant fiscal stimulus delivered directly to the people. This increase in disposable income is expected to have a multiplier effect, potentially boosting India's gross domestic product by an estimated 0.5% to 0.75% in the next fiscal year. The primary driver of this growth is the anticipated surge in private consumption, which is the largest component of India's GDP. So, who are the biggest beneficiaries? The middle class and lower income households. These are the families for whom every rupee counts. A significant portion of their monthly budget is spent on food, education, healthcare. These categories have seen the most substantial tax cuts. For a daily wage earner or a salaried employee, saving a couple of thousand rupees a month can make a world of difference. It could mean the ability to afford better nutrition for their children, pay for extra tuition, or simply build a small safety net for emergencies. This reform is, at its core, a social equity measure disguised as a tax policy. Small businesses and traders also stand to gain immensely. The simplification of the tax slabs from 5 to 3 is a game changer for them. Finally, the agricultural community is a prime beneficiary. Let's zoom in on the specific sector's vertical bar and items that are the clear winners vertical bar under this new GST regime. First and foremost is the fast-moving consumer goods sector vertical bar, particularly daily essentials. Pulses, flour, salt, milk. This is 0% tax vertical bar giving immediate relief to households. It also helps companies vertical bar lower prices drive higher volumes vertical bar offsetting per unit revenue drops. Education and stationery is another major beneficiary. School supplies tax-free vertical bar easing financial burden for millions. Store displays, 0% GST on school bags. Store displays, 0% GST on notebooks. Store displays, 0% GST on geometry boxes. More than savings vertical bar. It's an investment in the nation's future. Parents affording learning tools, vertical bar leads to better educational outcomes. A clear signal vertical bar government prioritizes education vertical bar making access fairer. Agricultural and artisanal sectors gain too. Farmers benefit from zero rating of fertilizers. Seeds, essential tools. Direct support into the rural economy. Handicrafts and artisan products vertical bar move to lower tax brackets. This preserves cultural heritage vertical bar and encourages buying local. Consumer durables and electronics will see demand rise. LED TV, refrigerator. Many moved from 18 or 28% to a 10% standard rate. A strategic push vertical bar fueling consumption and the Make in India vision. While the GST Bachat Utsav highlights widespread savings, it's important to understand that not everything is getting cheaper. The government has been very clear about its strategy to maintain or even slightly increase taxes on certain categories of goods. The new top slab of 25% is reserved for what are classified as luxury items and sin goods. This is a deliberate policy choice aimed at discouraging consumption of products deemed harmful to health or society. And it's also aimed at ensuring those who can afford luxury contribute a higher share to national tax revenue. This targeted approach helps balance revenue lost from tax cuts on essentials. So what falls into this 25% bracket? Tobacco products, cigarettes, pan masala. The high tax rate is intended to make these products more expensive and less accessible, particularly to young people. Aerated drinks, sugary beverages. This aligns with global health recommendations to curb sugar consumption and fight obesity and diabetes. The government message: make essentials affordable, but use tax policy to discourage unhealthy choices. Luxury goods are the other major category in the 25% slab. High-end automobiles, imported luxury watches, private jets. The rationale? Progressive taxation. Those with greater ability to pay should contribute more. This helps fund public services like infrastructure, defense, and social welfare. A landmark reform is only as good as its public awareness. The government seems to understand this well, which is why it has launched the high-visibility GST Bachat Utsav campaign. This is a multi-pronged communication strategy designed to ensure that the message of savings reaches every corner of the country. The campaign is being driven across all media platforms: television, radio, print, and especially digital social media. You've likely already seen the short, simple video ads featuring relatable characters. A mother shopping for groceries. A father buying school supplies. All expressing surprise and happiness at their lower bills. The campaign's tagline, Ab Bachat Hai Bachat. Now, savings and more savings, is catchy. It effectively communicates the core benefit. One of the most practical and visible elements is the mandatory then and now price signage in retail stores. Retailers, from large supermarkets to small kirana stores, must display posters showing old GST and new GST for common items. Example sign next to the rice aisle, rice packaged. Old GST 5%, new GST 0%. This direct comparison at point of purchase is a powerful tool. It helps consumers see the impact and ensures retailers pass on the tax cut, preventing confusion or price gouging. The outreach is not limited to urban centers. A massive ground-level effort is underway to take this message to towns and villages. Mobile vans decorated with GST Bachat Utsav branding are traveling through rural districts, using folk theater, puppet shows, local dialects to explain the changes. Government officials and tax experts are holding public meetings in community halls and village squares. They are answering questions and distributing pamphlets in regional languages, while the GST Bachat Utsav campaign paints a rosy picture. It's our job to look at the complete story. That includes potential challenges and criticisms. The biggest question is, will price reductions actually reach the end consumer? Will businesses pass on the full benefit of tax cuts? But monitoring millions of transactions is a monumental task. Some manufacturers or retailers might absorb part of the tax cut to boost margins. That means savings for you and me might be smaller than projected. Another major concern: state government finances. GST revenue is shared between the center and the states. With many tax cuts, some states fear their revenue collections could take a hit. Implementation and awareness in remote and rural areas remain major hurdles. The government runs a big outreach campaign, but India's diversity complicates things. So, after breaking it all down, what is the final verdict? Is the GST Bachat Utsav a transformative reform or just well-marketed hype? The truth, as it often does, lies somewhere in the middle, but leans strongly towards being a significant and positive change for India. These next-generation GST reforms are more than just a pre-festive gift. They represent a crucial evolution of India's economic policy. 8 years after the original GST rollout, this is a clear admission that the system needed to be simpler, fairer, more people-centric. This is a policy with a conscience. It acknowledges that economic growth is meaningless if it doesn't translate into a better quality of life for the average citizen. But for now, it has given millions of Indians a genuine reason to be optimistic this festive season and beyond. This is a story we will continue to track closely.